Welcome to the SNN.Network Canada virtual event. I'd like to introduce our next presenter, David McMillan, President and CEO of Deveron Corp. David, the floor is yours.
Thank you, and good morning, everybody. Appreciate you taking the time to learn a little bit more about our company. So Deveron is an agriculture technology company. We're based up here in Canada with offices also in Kansas City in the U.S. We trade on the Toronto Stock Exchange under the ticker FARM or FARM, and we are a digitally focused business that collects data across farms all across the country, and then we help digitize this information for our various customer bases to make more informed decisions within their agricultural operations. So really looking forward to speaking to all of you today. I think there's a Q&A session all of you can access if you want to throw in some questions. And we'll do that at the end of the presentation. So just to go through quickly, forward-looking statements. So this is typical of obviously any public company, and I'll let you all digest that offline whenever you want. So just to start with a highlight of Deveron and things we've been up to and where I see a lot of tailwind for us. We have a really interesting complementary service offering. Typical for technology companies that might describe themselves as a flywheel, where we collect data on farms and then that data goes into our platform where customers get all sorts of value out on how better to apply fertilizer, how to manage their seed, how to improve their operations. And that value add leads to more data being collected, and then more data being collected leads to more sales on the data analytics side. So we think we've got a really scalable model. We have a ton of organic growth, and we're really excited to, again, introduce what we've been doing on farms across North America to all of you. We're well funded in that we've raised another $8 million here in the summer, which we've been putting to work both on product and engineering development on the data and insight side. But we've also been putting money to work on acquisitions, and I'll walk everyone through today why I see a strong opportunity to consolidate a heavily fragmented crop consultant advisory market, which again feeds our flywheel of getting more data into our system and helping build out our regional relationships across the U.S. and Canada. Much like a lot of technology companies, we have a very high customer retention rate. So it's not quite recurring revenue from a traditional standpoint, but for the last 5 years that we've been operating our business, most of our customers stay on with us. The churn that we do have is we do have some white glove consulting-based work for large chem and seed companies that are looking at specific types of data. So that's really the explanation for that. And if you look through our financials over the last 3 or 4 years, we've really started to accelerate our higher margin digital insights business. So again, as Deveron turns to a focus of having much more of a footprint on the data insight side with a world-class service offering underneath, I think you'll continue to see the expansion of our margin, as well as more and more of a concentration of our revenues booked from product sales. Over the last 9 months, we've acquired 5 companies, and I'll walk you through a slide in a little bit, just looking through what I think is a really accretive opportunity to acquire strong cash flow generating businesses at really reasonable EBITDA multiples. And all of this is leading to more and more data being aggregated into our platform, which we believe is going to have a huge amount of value for the company moving forward. And last but not least, I think all of you probably on this call have been hearing about the opportunity in carbon markets. And Deveron has a really interesting play on this side in that agriculture should make up 30 to 40% of all carbon credit supply to fund whatever Paris goals and Glasgow goals the world is pushing forward on. We help some of the largest companies in agriculture today. We have over $200 billion of market cap using our carbon credit platform to help them create carbon credits. And we think that this is a huge opportunity for the company moving forward. And I'll walk you through some of those successes as well. So when you think about Deveron, you can think about us really as a collector and organizer of the world agricultural data. Today, our primary focus is in North America, but obviously many, many farms in the developed world have the same issues around improving input use and how to better manage all the decisions that happen on a farm digitally. And there's this huge transition that's been happening in agriculture over the last 10 years, there's this large migration from, pen and paper to a digital-first ecosystem, and we think we're well positioned to capitalize on that very large macro trend. So just to give you a quick overview of from the collection side where we have a footprint today, we touch most of Canada and a large part of the United States, with the U.S. Midwest being a really big, important focus for us. We predominantly operate within corn, soybean, canola, wheat, so your traditional row crop. And the collection services we provide today are largely based around soil sampling and soil health. We also help with in-season tissue sampling. We fly drones and provide remote sensing services. And we also install weather stations and other types of hardware devices that OEMs are manufacturing but really have no last-mile solution to get their products into market. So that's a really great value proposition that Deveron provides. And at the end of it, we see a huge opportunity in agriculture to invest in the last mile. So by going out to farms across North America, we're shaking hands with farmers, we're providing our services, and we're building these deep, long-lasting, trustful relationships that's so integral to be successful in farming. And then once we collect all this data, there's this massive opportunity to analyze it, prescribe it, and organize it. So whether that's the simple, was there an ROI in deciding to apply $100, more an acre in fertilizer? How best can I manage my feed costs? Where am I getting a return on my investment and with respect to application? These are all the things that our platform is starting to be organized to do. We help producers, anyone in the agribusiness, look at the type of input applications so that at the end of the day, we're really trying to maximize the right place to apply inputs, the right time, and the right amount. And all of this is leading to significant gains for our customers. And on the data management side, farm data in general is very unorganized. There's lots of different providers. Folks have different ag retailers that they work with. They use different types of tractors and combines. And so providing a really open source system for this data to be benchmarked and easily be transferred across the various interest groups in agriculture is a key thing that we see moving forward. So as we build out the system that allows for this data to be benchmarked, we're creating a really sticky platform where our customers are living in, and we make it really easy to share all of this data at the aggregate with anybody that needs to leverage it for their customer. So if you're new to agriculture, if you spent some time in it, we really think about three key ways that Deveron continues to succeed. And basically, benchmarking acres under management is a really great high level. And we're doing this in terms of increasing our acres through organic growth. Our sales team based in Kansas City has had, $4 million in new contract wins this year. We're really starting to hit the ground running in terms of our organic growth. But we're also increasing our acres through acquisition. And part of this opportunity really stems from the trusted local relationship that exists in agriculture. Folks that grew up in Iowa and go to church together, there's always a local advisor in that market that has the ear of the farmer. And we found that acquiring these businesses and using them almost as a soapbox to sell our products and services, as well as helping them grow their P&L by improving their efficiency, is a really great way to scale the model. And you'll see in a couple slides as I go through our revenue run rate how this is working. And then obviously when you think about this model, we're starting to increase the acres under management that we touch. The beginning of last year, we were active on about 1 million acres of farms. This year we're touching 6 million acres, both in our physical and digital ecosystem. And as we introduce more and more products and services to that group, you can see our average revenue per acre starting to increase, which I think, again, speaks to the compounding scale that Deveron is starting to achieve as we've been successful driving our value proposition. So as I spoke to at the beginning of this show here, really our customer journey starts with getting on farms through data collection. These are the typical very labor-intensive, hard jobs that no one in agriculture really wants to do. But without transparent and well-organized soil data, you're basically farming blindly. So by providing that service at a really cost-effective mean and leveraging the network that we've been building out across North America, Deveron is really one of the only vendors that's nationally organized and has the local hustle available to do this. And then again, once we have these early wins with our customers, they start to wonder, well, what else could I be doing with this data? So this is where we introduce them to our platform, and we start to get the advisory business going around how best to apply inputs, how to manage aggregate farm data for the better. And then, as we move further along the value chain, what we're starting to see is most of our customers using our data collection services on an annual basis, and then they're using all of our recommendations to manage their farm. And today, if you look at the farm advisory market, anyone that's independently advising a farmer, they're usually in this neighborhood of about $20 revenue per acre. So as you can think about Deveron engaging with a customer and then pushing them down the value chain to provide services, there's a huge amount of revenue on farms that we think we can capture as we continue to build out our product. And as you can imagine, this is where we start to see this real great improvement in margin. So you move from a labor-intensive collection process that gets in the door. It pushes the customer down the line of using our product within our platform, and which leads to this higher 80% gross margin, which again, I think is typical of many technology companies. So this is a strategy that we've really been working on over the last 3 or 4 years, and you can see that it started to culminate in what has really been a successful year from our side. As I mentioned, we've taken our acres under management from 1 million to 6 million. We did about $2.8 million in sales last year already through acquisitions that we've announced, as well as our organic growth through our Q3 financials. We've booked about just under $5 million in sales, and we have another, 3 or 4 million already on the tape. So Deveron is positioned for continued growth, and I think as I walk you through this potential on the consolidation story, there's a lot more runway ahead. And we think of like 2 main areas that we want to acquire within. One is the independent soil labs. So we see huge opportunity, as I mentioned, not just in collecting soil data, but also analyzing it. There's 150 of these labs across the U.S. and Canada, ranging in revenue run rates from $2.5 million to $35 million. And it's a highly fragmented space that really hasn't changed since the 90s. So we think that this is a great place for Deveron to play. And then on the much more local level and the farm advisory side, the traditional agronomist who owns that customer, there's over 20,000 of these independent businesses. And again, they're doing anywhere from kind of $1 to $3 million a year in sales, very steady Eddie, 20% EBITDA businesses. And we've had a lot of success starting to consolidate this. So as the company moves forward, we want to continue to execute on this acquisition strategy. Again, we've bought 5 businesses this year, ranging in revenue multiples of just under 1 to just under 2 times revenue. In general, the 2 to 4 times EBITDA. Where we paid a little bit more for one transaction, there was over $1 million book value of assets on the balance sheet. So I think net, this 2 to 4 times EBITDA multiple, or 3 to 4 times EBITDA multiple is really reasonable. And again, as we start to build out our pipeline, we see over $34 million in M&A revenue in our pipeline today. Again, we raised $8.5 million in the summer. So we have ample cash on the balance sheet to continue to execute on these transactions. And the best part is that we're structuring them in a way that's like highly accretive as well, and they don't use a ton of cash. So basically our target is usually 50% cash, 50% equity, and we spread those payments out over a 3-year period. So, from a benchmark perspective, you can acquire $10 million in operating revenue at 20% EBITDA for about $1,750,000 cash down per 10. So we think that as, again, we continue to consolidate these businesses, there's a strong story here. And the last thing I'll point to is this isn't like a dental practice consolidation story where you might see 2 to 3% growth post-acquisition. In our early acquisitions that we've acquired, we announced actually in our Q3 financials that our first deal last year is already up 34% year-over-year revenue. I think 20 to 30% revenue growth out of our acquisitions is a very fair target that we're pushing forward on, and we're really working deeply on our post-acquisition playbook to continue to see that type of return. Before I go to just a little bit more of a general overview of the business, I think, as I mentioned at the beginning here, there's this very large opportunity around ESG and carbon in agriculture as well. So today, Deveron launched a carbon services platform in September. We've already signed close to $6 million in recurring revenue over the next 3-4 years in some of the largest agricultural companies on earth. You need to have soil data to build a high-value agricultural credit. Deveron's network of field operators is one of the only scalable turnkey systems that I know of today to get acquisition of this data. And then on top of it, we've digitized the whole process so that large enterprises just have an API of all this data aggregated back into their systems. We believe that we have a really strong opportunity here to power agricultural world carbon credit program. And I think if you go back and look at a few of our news releases, you can see the size of it. We're working with everyone from the United States Department of Agriculture to, again, some of the largest chem and seed companies on the planet. And so I think just to culminate all of it of what is sort of Deveron's business model, it's really around the centralization of the data that is all being generated across farms across North America. And we're providing a standard place for all of this data to be managed, to communicate with our customers, to provide workflow and ordering. And whether that's for a new organic customer that comes in through our sales team, an acquired agronomist, or a lab that we're working with, all of it has the potential to create this very vast data lake that we see considerable upside in. And as the business started, we started selling data collection services. And now that we have this platform, we've been able to really supercharge our data insight business. That's led to the success of our ESG and carbon insight products that we've been announcing over the last few months here. And I think in the future, there's all sorts of new products that are really unrelated to agronomy. One is around aggregate data and how can we help broader actors that are interested in agricultural information gain access to macro level insights. But then also on a financing, mortgage lending side within the banks, everybody's looking for new ways to originate new loans. How can we maybe de-risk lending in agriculture by sharing operating data? There's this really big opportunity, again, around the continued productization of our individual services for our growers today that could lead to very vast product sale ideas at the larger level. And we're doing this all through FarmDog, which is a software that we acquired at the beginning of the year. The CEO, Laurent Brish, has come on as our VP Product and Sustainability. He's an ex-McKinsey consultant that is continuing to lead the development of FarmDog. And really, from its simple standpoint, it's a mobile-first application that allows farmers ease of access of all of their data. And we're building a very open tech stack that's built on API and collaboration and integration, as opposed to forcing the user to completely live in our ecosystem. When we acquired FarmDog, with that, we got 4,000 users and about 2 million acres under management, which has obviously helped us considerably scale our growth today. But I think the other thing to point out is within this user base, we've also got probably 30% of those users are independent crop advisors. So not only are we growing our organic growth perspective from selling our services and products through FarmDog, we're also gaining a large pipeline, again, for potential M&A in the future. And this, again, goes back to Deveron creating a digital ecosystem that folks in agriculture can leverage and find valuable, is going to continue to create all these interesting cross-sell and value-add opportunities as we build the business out. So from a team perspective, I've spent the last 10 years in public markets here in Canada. I've raised over $35 million for various ventures, 20 of which has been for Deveron. And I've got a great team under me. Scott Jackman, our VP of Sales, had a very long stint in the U.S. military, grew up on a farm in Illinois, and is really integral to being successful in the U.S. farm market. Laurent Brish, I mentioned, is the original founder of FarmDog, ex-McKinsey consultant, NYU Law School. We've got 40 years experience selling fertilizer in Canada that have come over to our team to help us figure out how to really drive data for sales and not inputs. And then recently, with our move into software, our VP of engineering has come over from a recent exit at a Canadian contracting software business. And we've built out our team of engineers to about 10 today. And then our VP of Finance, Craig, has spent various years within Canadian consolidation stories on the public side with a previous exit of a healthcare roll-up. So I think, we've got a great team well positioned to be successful for our strategy. And then at the board level, we've got an amazing leadership group, one being Bill Linton, who is the ex-CFO of Rogers Communication, one of Canada's largest cable companies. He's also on the board of one of Canada's largest grocery companies, the Toronto Stock Exchange, and has been a very prominent private technology investor here in Canada. Joelle Faulkner is another board member that I'll highlight. He runs a $700 million private equity fund called Area One that invests in farmland across Canada. So we've got a really great mix of technology investors, public market leaders, and farmland investors that I think positions us to really think about over the next 3 or 4 years how we build a considerably impactful company, again, across the American and Canadian farm market. So I mentioned a little bit about our previous kind of track record from a revenue perspective, and as I say, we're sort of on track here based on our public disclosure in and around this bandwidth of sort of $8 million through the rest of the year. I will update this from a standpoint of revenue by country. Last year, we were predominantly Canadian-based business, and this year things have grown so much that I would say, close to 60% of our revenue is going to come from south of the border, and I think that's a trend that we're going to continue to see move forward as the company expands stateside. And then just to end with the cap table, so we have 88 million shares out or so. Company values at $70 million. There's a few remaining warrants from a previous round of financing when we did at 45 cents that are obviously deep in the money. Those expire next year. And then we have another round of warrants from the recent financing we did in August. And from an ownership perspective, so our management, directors, and strategic investors within our director group own roughly 20% of the company. And then 60% is held by retail. But at the end of the day, that retail shareholder base is actually a rather tight-knit crew of high net worth investment advisors that have helped finance this company since 2016 when we first took it public. So, with that, I'll end with my contact information. Both myself and Phil, our director of growth, are available to book meetings, answer any questions you might have about the model. I think agriculture technology is an amazing growth space. There's not a lot of companies to participate in on the public side just because so much of the money has come out of Silicon Valley. We think that over the last 4 years, we've really positioned ourselves to take advantage of the market. We now have the trusted relationships with our customers, and we believe that this consolidation story is really accretive, and I think we can grow these businesses significantly post-acquisition. And I think Deveron's got a great opportunity to be a really prominent leader in the North American ag market, which we all know is worth billions upon billions of dollars because nobody is ever going to have to stop eating. So with that, I'll jump over to the Q&A here, and we've got one question so far, and I can ask all of you if there's anything else you'd like to punch in, just to punch it into the Q&A window, and I'll get to your question. So the first one is, what is your vision for the company for the next 12 months? And I think it's being reiterated in this presentation, but now that we have this value proposition, which is there is a huge amount of value and cash flow being driven by the independent advisory market today, that just is very fragmented, and nobody is building technological solutions to help these farm advisors grow their businesses. Everybody is just trapped and running around each day to try to get whatever they need to get done for their customers. And we see by building software and solutions to help these folks grow their revenue and owning their P&Ls through acquisition, we had a really powerful network effect over time. And so by doing that, we're growing our customer base, which is growing our acres. And then again, after we acquire these businesses, there's such a huge opportunity to grow the average revenue per acre that all these relationships have, that I think you get a really scalable model. And And that aside, it has a really great opportunity to be a big, successful business. If you look at Boyd Auto Services, Parkland Funeral Home Services, like these consolidation stories can work very well. But on top of it, we're continuing to invest on product and engineering so that, again, we can monetize the data. And the data, I think, is this incredibly untapped resource that, even we're learning today. It has led to the launch of our very successful, carbon platforms. It's allowing us to iterate faster than we ever have before because we're learning so much about what our customers need. And I think as you look at where, Deveron could be at the end of the next 12 months, significant growth. I think the trends that we've been putting up of sort of 100 to 300% a year will continue on. And I think that as we continue to be a product company, we have a really large potential in the future for a very credible amount of EBITDA. So, with that, if there aren't any other questions, I'll probably end for now, and I'll let everybody get back on their next meetings and their one-on-ones. I'd just like to thank the SNN.Network for organizing the event and having Deveron present. And as I say, all of you listening today, if you have further questions, feel free to follow up with myself or Phil. And with that, I will say goodbye.